You've fallen in love with a home, you've made the perfect offer, and the seller has accepted your offer. So this is one of the most exciting days in the home buying process, and this will kick off a whole slew of events leading you to the closing table and closing day. So once you're under contract, this means that your agent has walked you through how y'all will be structuring your offer, any contingencies that will be in place or waived. Your purchase price will be set, your title company will be chosen, and your closing date will be selected as well. So once we have the contract, that is when we officially get things started and can really get the process moving for you. Step 2 in the process is what we call your initial disclosures. So this is where I have taken your purchase and sale agreement and plugged in all of the details of your home purchase into my system. So I have the property address, the closing date, the title company, your buyer's agent, the listing agent, just all of the pertinent details of the transaction I have now plugged into my loan system. And we will be triggering the initial set of disclosures for you. So these are exactly what they sound like. Initial disclosures are just the initial loan documents that allow us to start the process for you. So a lot of these numbers will still be estimates, and you may be thinking, Jesse, I'm under contract now. Why are we still working in estimates? And the answer is that numbers, final numbers really just take a little while to get dialed in. We have to wait for the title company, the escrow company to get back to us with their numbers, and that could take a few weeks. And the last thing we want to do is delay a closing by a few weeks just to get some initial disclosures out. So we typically err on the conservative side when we are sending out these initial disclosures. Most of the time, these numbers will be adjusting downward a little bit. I mean, there are times when that's not the case, but usually we try to err on the estimated higher side. So when things come to closing, we're either very, very close or a little bit under what we initially estimated. So we will be sending these out for you to e-sign electronically. They're very easy to do. If your interest rate is locked, which we'll typically do at time of initial disclosures, that will be reflected in these disclosures for you, and you will want to sign them all and complete what's called your intent to proceed, which allows us to actually order your appraisal, which will be one of the next steps here. So you've signed your initial disclosures, and we can now get the appraisal ordered. So how we typically do that is we will send you a payment link or send you a credit card authorization for you to provide us with your credit card information so we can get the appraisal ordered. These do have to be paid for upfront. That's just how the mortgage process works most of the time. And this enables us to actually get an appraiser scheduled and contracted to complete the appraisal for your property. What an appraisal is it is a determination of the actual value of the property. So what you say the property is worth or what you think the property is worth is not always actually what the property is worth. So what the appraiser will do is typically complete a manual in-person inspection of the property. This is not the same as a home inspection. He's not going to be going under the house looking for rotten mold, checking the electrical, all that. He's really just looking for the general condition of the property, making sure that there is nothing, health and safety wise that's wrong with it, making sure that there's not a lot of rots and peeling paint or water damage. He's just looking for like big things that could be really big issues as far as like the collateral of the home is worth and things that could impact the value from that perspective. So once he completes his inspection, he will go back to his office and he's going to do a bunch of market research to determine, well, what are the similar homes in the area that have closed in the last 6 to 12 months? What did they close for? What was their condition? What was their price per square foot? He's just going to be comparing the properties against one another and using that data to come up with his valuation of the property. Now, if the appraisal comes in above the purchase price, nothing changes. It just means you've got some baked in equity, which is always a good thing. If the appraisal comes in right at the purchase price, that's great too. Just means that you were spot on with the offer and the agents did a great job pricing and offering on the property. If the appraisal comes in under your purchase price, there are a few things that you can do. So typically our first course of action is going to be completing what we call a reconsideration of value or an ROV. So when I do this, I will reach out to the agents and say, hey, we have a low appraised value. I'll usually let them know where it appraised at so they have an idea of what we're working with, and see if they can give me some additional comps to provide to the appraiser to see if we can get them to adjust their value. I am not allowed to talk to the appraiser and convince them to adjust the value. I'm not allowed to ask for a specific value. I can just present him with data that we believe supports the purchase price that we're under contract for. And if he disagrees and nothing changes, then it is what it is. But about 10% of the time, we do get an adjustment to value that may be favorable for us and at least put us closer to where we need to be. If a reconsideration of value doesn't get us where we need to be, the next step will be negotiating the purchase price or removing any seller credits with the seller. So we'll see if they'll be willing to reduce the purchase price or meet us in the middle, or just see if we can get some kind of agreement to get us back to a middle ground and where we can move forward with the purchase. If the seller isn't willing to meet us at all and change the purchase price, really the only other option available is to put more down to cover that appraisal gap. So for example, let's say you were purchasing a home at a purchase price of $300,000, but the appraisal came in at $290,000. That means you need to bring in an additional $10,000 on top of your already decided down payment and closing costs to cover that appraisal gap. So if at the end of the day, none of those options are viable, you would just cancel the contract, to get your earnest money refunded as long as you have an appraisal contingency, and you would just move on and find another home, and the seller would need to find another buyer. All right, step number 4, underwriting approval. This is one of the biggest milestones in the process. So when we talked about the pre-approval, I talked about an automated underwriting system that we always run as part of the pre-approval process. This underwriting approval that I'm referencing here is where a real live human underwriter has reviewed your file, reviewed your documentation, and provided us with an initial or a conditional underwriting approval. This conditional underwriting approval is contingent upon conditions needing to be fulfilled. Some typical conditions that we see are things like updated pay stubs. Maybe the ones we have are just old and expired and we need fresh ones. Updated bank statement showing your earnest money being withdrawn, gift documentation, the title work, the appraisal. Those are some just typical boilerplate conditions that we see. Sometimes weird things pop up on these conditional approvals that we may need to work for, and sometimes there are problems that we run into as well. But if we've done a good job with your pre-approval, the chances of that happening are pretty slim. All right, so once we have your conditional underwriting approval, we need to work on the conditions. So your processor at this point will be reaching out to you, letting you know, hey, congratulations, we have your initial underwriting approval. Now, here is what we need from you to get your final underwriting approval. So time is really of the essence here. You don't want to dilly-dally and wait to send conditions back. You want to jump on them and get them back to the processor as quickly as possible, because the last thing we want to do is delay closing because it took you a few extra days to get the conditions back to your processor. So super important that you jump on those and to get those back to the processor so we can get those cleared and make sure that we have a clear path forward for you to closing. All right, so final approval. This is where we have moved through the entire process. We have got the initial approval, we've got the appraisal back, you've signed all your initial disclosures and any updated disclosures that go out through the process. And we have submitted everything back to the underwriter. They review it all, say, hey, check, 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 we're good. They give us your final approval, or what we call your clear to close. So this is one of the most exciting steps in the process too, because it is a just weight off of your shoulders. Hey, we are through underwriting. Now we can move forward to closing. So once we get your clear to close, we will do what is called balancing with escrow, which is where we go back and forth and make sure that all of our closing costs, all of our fees are in alignment to the very penny. And once we have that, we will move on to the next step, which is your final loan documents. So once you have your final loan documents out to escrow, they will reach out to you to schedule your closing. So they will typically have you come in person to their office. Sometimes you sign at the same time as the sellers, depending on the situation. And different states also handle closing differently as well. So in Tennessee, we are what I like to call a wet fund state or a table fund state, which means that when you are at the closing table and signing, as soon as you finish signing on the dotted line, you are closed, everything is done. Some states are what I like to call dry fund states, where you basically need to wait for the ink to dry, if you will, on the paperwork before we can close. So you will know which state you're in. The title company will help you understand like when your closing will actually happen. If you're in Tennessee, we are a wet fund state, so that should be pretty clear for you. Again, the day before closing, your escrow company will have reached out to you to schedule your closing and also to give you the final amount of your cash to close. So you will either wire in those remaining funds to close, or you'll bring a cashier's check with you to closing. You are not able to use personal checks. It does have to be a cashier's check or a wire for the funds to close. That's really the only option. So when you are at the closing table, you're gonna sign through a bunch of documents. There'll be a notary there with you. Typically your loan officer will be there, your agent will be there. We try to have a fun time because it is an exciting day most of the time. So you'll sit there, you're gonna sign your name on the dotted line a bunch of times. And then at the end, you will get a copy of all your documents, you'll get your keys, and the home will be yours and you'll be ready to move in. So we will celebrate and enjoy those special moments with you as you celebrate your home ownership. So what happens after closing? You have purchased your home, you've given all this money to the mortgage company for your down payment and closing costs. Now what? So after closing, we are going to get things set up on our end with your mortgage servicing. Sometimes that servicing will be sold to a different mortgage company to handle your payments and the servicing of your mortgage loan, or sometimes that will stay with the mortgage company. You will always know who to send your payments to. Mortgage companies want to make sure they get your payments, so they are going to make it very clear who to send that to, who to make it out to, how much to send, and where to send it. So just know that you will get mail from the mortgage company in the days and weeks following your closing. You typically have a little over a month before you have to make your first payment. Sometimes 45 days. It just depends on when you close in the month. If you ever have any questions about something you receive in the mail, reach out to your loan officer, reach out to me. We want to make sure that you're not getting scammed because there are a lot of junk mail, a lot of scams that get sent out to new homeowners once that's reported to your credit. So if something seems off, it probably is. So never hesitate to reach out. That's literally part of my job, is being a professional question answerer, being here to make sure that you feel comfortable and confident in your home buying journey, even after you've closed. My name is Jessie and I am a mortgage loan officer. My goal through these videos is to help educate you about the home buying process and answer questions that you didn't even know you had about financing a home.